Good morning and welcome to the Community Sector Council. My name is Shelley Martin, CPA, and I am the project co-coordinator with our Buy the Books program, which is designed to improve financial management in the community sector. I'm just going to do a quick check to make sure everyone can hear me this morning. So if you could just send me a quick yes or even raise your hand. That would be great. Okay, I can see Lillian can hear me. That's great. Thank you, Lillian. Just going to wait a very quick second. Can you hear me there, Darlene? Perfect. All right. So as I said, our Buy the Books program is designed to help improve financial management in the community sector, and we have various sessions set up to offer over the next 6 to 8 months in this program. So you can see here we have some upcoming webinars that we're going to offer throughout November and December of this year, and we of course will have more after Christmas, and we'll be notifying you of those sessions when the schedule is more set. So please check these out on our website. We're trying to offer some great just informational sessions to help improve your knowledge. We're also operating an in-person session in December on operating budgets and cash flows. So you can check that out on our website as well. All right, so we are going to get right into things. So today's session is about setting up a chart of accounts. Why it's important, what you should consider when doing so. So first of all, the chart of accounts is basically a list of all the accounts in the organization's GL, or general ledger. A chart of accounts sounds fancy, but it is just a list. And usually what we do is assign each and every account an account number. And by doing so, we can also group specific accounts. The groupings are usually related to, say, the financial statement presentation. If you're using accounting software, you will have to assign each and every account a specific number, and we'll talk in a few minutes about common numberings that systems use. If you're actually doing your accounting in Excel, so if you're actually doing your accounting in Excel, you may be tempted not to assign numbers because, of course, you don't have to. However, it's still good practice to use a number for each and every account. And that's basically to help minimize errors. So, for example, if you have 4 different receivable accounts in your on your books or in your general ledger, then it's easy to or easier to make an error by recording a transaction to the wrong receivable account. So we would assign each of those 4 receivable accounts a separate number. So even if you're doing your books in Excel, that's a good practice to have. So why is using a chart of accounts important? Well, as I just mentioned, it easily identifies the specific accounts so that you minimize the chance of making errors when you are recording transactions, especially in if you're using, say, Excel as opposed to accounting software. It also helps to ensure the consistency of preparing financial statements and other reports. So as I mentioned, each account can be assigned to a grouping, and that grouping won't change without actively going into your chart of accounts. Sorry, I'm not sure what that message is showing up there. Each of your groupings won't change unless you actively change it. So you can add accounts to groupings if you add an account to your chart of accounts later. But by having these groupings, every year when you prepare, say, your financial statements, it will consistently use the same accounts in those groupings, which means your comparative numbers on your financial statements will be, they will be comparable. They are consistent. You can also set up your groupings to help complete various applications, claims that you have to do throughout the year. So for example, if you have to complete claims to your funders, then by using these groupings, you will ensure that you are including the same things each time. And as well, oftentimes you can run a report for these groupings that give you the numbers quickly. So it just helps, it just makes it easier and simpler to find the numbers that you need. And of course, that's important when you have filing deadlines. So you have to file your charity return 6 months after your year end, or your HST return is due the end of the month following the month or the quarter that your filing deadline is. So these groupings just help you complete these returns quickly. Now, charts of accounts do normally follow a certain pattern, and they are based on the financial statement presentation. So it usually starts with the accounts that are on your statement of financial position, which is also known as your balance sheet. So those would be your assets, your liabilities, and then your net asset accounts. And of course, next would be the accounts from your statements of operation, or your statement of operations, being all of your revenues and expenditures. So this is the normal number assignment to each of those types of accounts. So for example, accounts 1000 through 1999 would be where all of your assets are. 2000 through 2999 would be all of your liability counts, and so on. So this is the general numbering, and you can start with as basic a chart of accounts that you need, and of course modify it afterwards. And we will talk about that a little later as well. So your statement of financial position, of course, it includes first your assets. And basically, you will have a separate account for each and every asset that you have. So if you have one bank account, well, your bank account number may just be 1000, or so your account number in your GL, not your bank account number with the bank, of course. If you have 3 different bank accounts, then you will assign a different number to each bank account, because of course you have certain transactions that go through one account and not the others. So you want to make sure you're recording your transactions in the correct respective bank account. Petty cash would again have a separate account. You wouldn't normally put that through or include that with your bank account. Any of investments that you might have. So if you have 2 or 3 short-term investments, you may include them in the same account, or you may choose to have them separately. The more detail you have, well, it's really up to the organization exactly how detailed you want your chart of accounts to be. So you could include your 3 GICs in one account, or include them in separate accounts, whatever makes more sense for your organization. When it comes to receivables, we often have many different types of receivable accounts. So you could have grants receivables, money you know that's coming from your funders, but you just haven't received yet. Contributions, receivables from employees. So you may have made, I don't know, a travel advance, and that may be set up as a receivable until it's used or something like that. HST receivable is something you very likely have. So you would have all of these set up in separate accounts. Your prepaids, all of your fixed assets, So again, you would have separate accounts for each of these. If you have land, buildings, you very likely may have some equipment, furniture, computers. They would all have separate accounts, and also the related amortization accounts would be separate as well. So your accumulated amortization or accumulated depreciation, whatever you are calling that. And of course, finally, if you have any intangibles, that may be less likely for your organization, but it is a type of asset, and you would again have them all in separate asset accounts. So this is just an example of a chart of accounts for various assets. So as you can see, they have two bank accounts. There's a checking account and a savings account, and you would put them in separate, you would assign them separate account numbers. The same for the receivables. You can see there's an accounts receivable, which is account 1200, and then a grants receivable is account 1210. And of course, then the fixed assets, the same thing again, separate account numbers. And this just basically helps reduce the possibility of errors when you're recording your transactions. Now note, of course, this assumption is that your organization uses accrual accounting. If you are using cash accounting, you will still have a chart of accounts, and you will still assign account numbers, but you would not have, for example, receivables, because they would not exist under the cash accounting method. For liabilities then, the same idea. All of your separate liabilities you should record in separate account numbers. So this is just some of the liabilities that your organization may have. You would keep your accounts payable separate from your HST payable, for example. You'd also have separate payable accounts for your source deductions that you're holding back for employees. So that would be your EI, your CPP, and the employee income taxes that are held back on their behalf. So all of those payables would have separate accounts. Interest may be if you have any loans and interest accruals or interest that you haven't paid yet, of course, we would have a separate payable account. Wages payable, accruals at the end of the year, that kind of thing. And certainly deferred revenue. If you've received funds that have not been used yet, this is where they get recorded. So make sure you have separate accounts for, again, just each and every liability that exists. So this is a quick example of how you may structure your liability account numbers. Your accounts payable does not have to be account 2000. It is often the case simply because accounts payable is one of the first liabilities or one of the most common liabilities that organizations have. But your payables would typically be in that 2000 range of account numbers. And most accounting software can suggest a chart of accounts, so they may suggest your accounts payable is account number 2000. It depends on the software that you are using. Your net assets is your next grouping. Typically, you won't have a lot of net asset accounts. Usually, we separate them, of course, between restricted and unrestricted net assets. So restricted, they could be restricted for various reasons, whether that's external restrictions, such as an endowment that's received, or it may be restricted, a decision that the board has made. So it could be things like reserves that have been put in place, but those net assets are still restricted for a specific purpose. The unrestricted net assets are basically everything else that the organization has generated that are available for use in future operations. So you may only have 2 net asset accounts, restricted and unrestricted. It really depends on the organization itself. Also useful to note that if your organization uses fund accounting, then you would have your different funds assigned here. Again, with the same account number sequence, so still in the 3,000 range, but these would be called funds as opposed to restricted or unrestricted net assets. Revenues are the 4,000 level numbers, and there could be 3 revenue accounts. There can be 50. It really depends on the organization and how you want to be able to report your revenue. So how specific do you want to track it? And revenue is often an area where it is tracked it can be very specific. So you may have 3 different locations in your organization, and you're tracking donation revenue for each location. So that would be 3 different revenue accounts for donations, for example. Or, well, the same with any of these. Or you may have many different ways that your organization generates revenue. So not just from grants and contracts, donations. You may have many different fundraisers throughout the year, and you want to track the revenue from each fundraiser. Well, you can do that. There's actually a couple of different ways you can do it, but one way, of course, is to assign each fundraiser a specific account. So this, again, just a quick example. This company has, or this organization has membership dues, veterinary services, contributions or donations, and some grant income. So the accounts you have will be very specific to your organization. And you may, as I said, you may only have a couple different sources of funds, and you may have 15. You can alter this to what you need and to help you with your reporting. So your board of directors may want to see your revenue from each project or from each location or from each division, however your organization is set up. And finally, the expenses. As you can imagine, there will probably be many different expense accounts. Again, you do want to record them separately for a bunch of reasons, as we have already said, to help minimize errors, but also, and especially when it comes to expenses, you're keeping track of what you're spending. So you really want to have a good handle on your budget, and by having detailed expense accounts where you can budget and then monitor the actual spending for each expense. That's very useful for not just the organization, but of course the board of directors. So there's many different types of expense accounts that you can have. When it comes to salaries alone, you can see they have a separate account for the gross salary that an employee would earn. There's also an expense account for health insurance that the organization may be paying a portion of. Payroll taxes, so these would be your employee benefits expense. So it's the organization's share of EI and CPP that they had to remit based on what their employees are remitting. And there's any number of expense accounts that could be here. Again, it is specific to the organization. Most organizations will have some amount of salaries, office expenses, those types of things. But you will tailor this to what exactly you have in your specific organization. Are there any questions on the chart of account as we're going along? Just have a quick pick at our question board here. So this chart can be as simple as you require or as detailed. You really want to consider what your information needs are. So consider things like what types of reports might the board ask for and what level of detail would be in those reports. And that is a good way for you to think about what level of detail I need to have in my chart of accounts. So as I mentioned, you may have different locations for your organization. So are you going to want to show salaries for the employees in each location? If you are, then you may very well want to have a separate account number for those three salary locations or those three locations. Just to give you an example, so in this case, I've got revenue by program, so maybe you have different programs. So this is a church, so they have just the general contribution revenue. Then they have contributions for church maintenance, so contributors may actually contribute to certain programs that the church has. In this case, it's a church. So somebody may make a donation specifically for church maintenance, or they may make a donation for the kids' summer camp that the church is holding. So you can actually, you notice in the account numbers, the first 4 digits are all the same, which signifies that these are contributions, but then there's an account extension, so 10, 20, 30, to signify the different programs. So that's one way that you can do this. I've also given the example how you can do it by location if you're not doing it by program. So in this case, we have the salaries for each of the 3 locations that this organization would have, being head office, St. John's, and Corner Brook. And again, the first 3 or the first 4 numbers of the account number are the same. So 5001, indicating that these are all salary accounts, but then there's an extension to indicate the location. So this is one way that you can do this. This works great actually in Excel. You can have the account number and then the program or the location number in a separate column, and you can filter by that location or program number, so that you could bring up all the accounts specifically related to that one program, which can often be quite helpful. If you're using some software, many different accounting software allow you to set up projects. So you can actually, when you're recording an expenditure, you select the account number that it goes to, but you can also select the project that it should be assigned to. So that's another way that you can track revenues and expenditures by different projects or divisions or locations, whatever it is you may need to do. You may just have one general program and one location, and you don't have to use this feature at all. And that's fine. Again, it's very specific to your organization and your organization's needs. So even maybe before you set up your chart of accounts, it might be useful to have a discussion with your board of directors to make sure you know what types of things, or at least at the start, what types of things you expect or they would expect for you to provide. That may change as time goes by, and you can always change your chart of accounts. You can add account numbers. I don't recommend deleting account numbers if the account has been used already, but you can certainly add account numbers and add projects and that kind of thing to tailor the reporting to what you need as time goes by. So don't think that if you initially set it up and it's not adequate, it can't be changed. It absolutely can. It's just that when you set it up initially, you will set it up to what you expect you will have to use, and that expectation might change as time goes by and as the organization grows, for example. So that's really the basics on setting up a chart of accounts, exactly what types of things you're looking for, and of course your chart of accounts is going to be really tailored to your organization, so it can be as detailed as you need it to be. I wouldn't suggest making it overly detailed if the need isn't there. That just complicates not only just having a very large chart of accounts, but it's not necessary. The more detail you put in, the more time it takes to go through accounts, make sure everything is grouped the way you want. So you want to keep it as simple as possible while making sure that you can, it suits your needs, essentially. I have some great resources uploaded to the webinar. You should be able to see those in the handout section. The first one is just a discussion on nonprofit chart of accounts, but it does include a sample chart of accounts that you may be able to use for your organization, especially just starting off. And when you're starting out, you may not have as good idea of the needs at that time. So it's kind of a starting point that you can use. And then, of course, tailor as you find out more about what it is the board of directors might be looking for in a report or something of that nature. The second one is a little more detailed discussion on developing a chart of accounts for an organization that does have different projects or different divisions. So it's a good discussion on how you can structure your chart of accounts to be able to recognize those different projects, for example. There is a discussion on chart of accounts from QuickBooks, if that is a program that your organization is using. And the last one here I thought I would put in, as some of you may be starting organizations or in early stages, and it's actually an article about free accounting software. Talks about who the software is designed for, so who might want to use it, the great things about it, and if there's any limitations. It is very up to date, so the article was updated actually in July of this year. And one of the options is a Canadian software program that I like the idea that it's Canadian because it may be geared more around our terminology and that kind of thing. And it looks like I have not used it myself, but from the reviews, it does look to be a good software to use. The only or the biggest limitation they do mention is that it limits you to, I believe, 100 invoices a month, which probably would not be an issue for a smaller organization. But anyway, that article is there. It might be a great resource if you are looking for accounting software options that won't require a lot of costs. And most of these are completely free. They may have versions where you pay a small amount for additional, I guess, options in the software, but they do have basic. They all have basic software options that are free for use. So at the end of our webinar, of course, when we complete, you will be sent a survey. If you could, we'd be very grateful if you could fill that out. We ask for feedback from all of the sessions we offer through all of the programs we offer, and we do look at those in detail for, especially for feedback. If there are other sessions that you would like for us to offer, we always encourage you to please put that on the evaluation, or you can even contact myself or Darlene Scott here at CSC, And just let us know if there's additional things that you'd like for us to offer. We're always looking for new things to do, and to make sure that you guys are getting the types of sessions that you want. So by all means, please take a minute. It should only take you a minute or two to complete that. So that is the basics of our. Oh, I see Darlene is talking, but I don't hear you, Darlene. So I'm just checking to see if you are muted. Okay, Darlene, we should be able to hear you now.
Oh, hi, Shelley. Thanks for opening up the mic.
Hi.
And I wasn't actually talking. I think I might have been typing in. I just wanted to say it was really, really helpful, and I'm really glad that you advertised the other sessions that are upcoming on Buy the Book. So thanks for all that great information.
Oh, no problem. Does anyone have any questions that on the chart of accounts, or you can certainly type them into the question box, or I could give you the mic if you prefer. We have tons of time if you do have some questions. I know Lillian's hand is raised, but that may be from the beginning, I believe. Yes, it is. So does anyone have any questions you'd like addressed? So if not, that does conclude the session. We are on the setting up the chart of accounts. By all means, when you're done, fill out your evaluation. Please let us know if there's anything that you would like to see further. And I hope to see you at our upcoming sessions. Don't forget, on the 22nd of November. The 29th of November, another webinar in December. So these are all outlined earlier in the slides, as well as check out our website at communitysector.nl.ca.
Shelley, one other thing.
Yes.
You might, I'm not sure if you mentioned it right off the top, but we will be trying to, at the website that you just mentioned, get all of the webinar recordings up online so that if you wanted to listen to it again or share it with somebody else, we should have it up on our YouTube channel fairly soon.
Absolutely. So this webinar is being recorded, as Darlene said, and we will intend to record as many as we can and put them on our website. So please, if you need to refer back to it, or if you want to refer anyone who couldn't attend, we will hope to have that resource up for you as quickly as possible. Well, thank you very much for attending. I hope that it was useful and informative. And as I said, please don't hesitate to contact me. My contact information is there, but you can reach me at Shelley Martin at cscnl.ca, or by phone 1-866-753-9860. And I hope I'll be speaking to you all again soon. Thank you very much.
Bye, Shelley. Thank you.
Bye-bye.